Guys, welcome back to the Independent Investor Channel. My name is Ryan, always looking to provide value to the subscriber base that's making their way into the community, looking how to fundamentally build wealth over time, talking about two of the premier players in the industry. These are two of the superior products that have come up on the channel really through the life of the channel, recommended through different phases of the channel, depending on what type of investor we're appealing to. Lots of different folks making their way into the community, young and old alike, and they just want to know what their options are. And in my opinion, we try to streamline the number of options that are available on the market so as not to be confusing to investors that are making their way to the stock market, looking to genuinely understand what it is that it's available for them and what will fit their risk profile. All right. In this video, I'm going to break down what I feel are two of the best products that Vanguard offers through the VTI, which is the Vanguard's total market index, and the VOO, which is the S&P 500 tracking ETF. Okay, this comes up a lot. Which one should I buy? Can I buy both of them? What allocation should I have if I buy both of them? Okay, there's a lot of different factors, that of which are easy to incorporate into your decision as to which one of these is going to be the most appropriate for you in your portfolio. Okay, and I've had a lot of people come to me and say, Ryan, I'm invested in both. You know, what's going to happen? Okay, I can tell you what's not going to happen is your portfolio is not going to spontaneously combust, okay, because you made your way into the channel and you found your way to two of the very, very best investing products that are available through Vanguard. Okay, that is not going to happen. What may need to happen is you may need to retool what it is that you want as far as the goals that you're seeking to reach within each of these particular products. But because in my comparison of these two products, I can tell you that the goal of each of the ETFs is going to be drastically different, okay? And you'll see that when we get toward the bottom here. Obviously, some of the top-end features of both of these ETFs are the same. They're absolutely the same. But there's some features within each of the ETFs that are drastically different, and they're going to appeal to different classes of investors. Okay, guys? So let's kind of get right into it. The VTI compared to the VOO, we're talking about an expense ratio of 0.03 in each of the accounts. This cannot be understated. It cannot be underestimated. The power of putting these products into a self-directed account, especially looking to utilize in some form or fashion either one of these two accounts in its totality or in a mix of a portfolio. Now, you guys need to understand one of two things. Either you're going to custom build your portfolio, all right, whether or not you're going to custom build it with maybe a VTI product and some exposure to the bond, or maybe you're young enough to where you justify just owning the VTI exclusively, or you want to go with more of a recommended allocation portfolio model. That's a mouthful, I understand. But on M1 Finance, they do this for you free of charge. Most of the major brokerage houses will allow you to go in there and say, if I'm a conservative investor, right down the middle, okay, here's what your portfolio should look like. And it's going to be a mixture of some small cap, mid cap, large cap names, perhaps maybe some bond exposure, and most all the allocation models that I've looked at also recommend that you have some global exposure. So you're getting some global exposure, some domestic exposure, maybe some real estate thrown in there, and some fixed equities exposure. And I know that there's investors out there who may have just heard what I said and not understood a thing. That's fine. But please take some time to search out these avenues on M1 Finance. It will take a matter of minutes to learn yourself up. Do not get frustrated and just throw in the towel and say, you know what, I'm going to seek out a professional, because they're not going to tell you anything that's magically different than what I'm telling you, okay? There are X number of products out there on the market that will allow you exposure to the stock market and have performed historically well over time, okay? They're not going to wave a magic wand for you, nor are they going to give you a strategic advantage in the market. I contend that that is planned failure, and they will probably provide you a strategic disadvantage in the market. So 0.03 on each of these two fine products. Now you're going to see here that the performance year over year is significantly different. Double up on the VOO at 14.50%. You cannot underestimate the power of VOO, but do not underestimate how exposed you are to the equities market over here. This is significantly more of an aggressive fund. So with risk comes the reward. I will say it again, with the risk in VOO comes the reward of the 14.50%. Now, those averages have been skewed to the upside. VOO was incepted back, I believe, in 2008, 2009, I believe 08. Okay, so we haven't really had a lot of data on VOO year over year performance, okay? So this 14.5%, I would caution you to use some discretion in just going out there and saying, absolutely, I've run the compounding calculator at 14.50%, I can be rich and retire at 35. Please don't do that, because what I've said is in the next short to medium term, 1 year to 2 years, we probably are looking at a correction in the market in whatever form or fashion we get, whether it be bear market or a full-on recession, okay? This has been a market of historic proportions, and anybody that's investing at this top end of the range that maybe have missed out over the last 10 years, I highly, highly recommend that you use caution and scale, okay? Be optimistic with the market, certainly. If your time horizon is 20, 30, maybe even 40 years plus, certainly you can invest to whatever suits your needs at your certain time, but it never hurts to acknowledge where the stock market is at the particular time. Now, when we're comparing these two, most people want to gravitate to the big one, right? Your eyes just move over to the 14.5. Then why did I recommend VTI? Okay, I'll throw that question out there and let you think about it for just a second, okay? VTI, you have to understand when I'm putting information out there for the masses, for mass awareness, this is what we're after, because people are going to pick up on this information and they are going to invest, and they're not going to do one lick of research. They know that I've done the research, and quite frankly, I've already front-loaded putting information out there, knowing that there's going to be people that go trip and fall into these assets. I would rather have them trip and fall into these phenomenal assets, okay? Even if they knew nothing about the stock market, all right? I'm thinking for you. I'm thinking ahead, because I don't want people to come back and say, Ryan, you recommended this aggressive stock. I invested my entire retirement in it, GoPro, all right? And it's gone down 75%. Now what do I do? You're stuck. You're stuck. You've lost that money, because now you've pinned your hopes on the back of one company that some YouTuber recommended that you go and invest all your money in, okay? I'm sorry for your loss, but this is where we want people to succeed in the market. And if you, again, knew nothing about the market, you tripped and fell into one of these premier products, I could care less which one you choose. You're going to win with either one of them long term, okay? Long term. You're not going to get involved in the S&P 500, enter into a recession and a bear market, and come back to me and say, what did you do, Ryan? You got me into this. This is not fair. What I'm going to tell you is to stay the course and invest more. That's what these products are built to do. Now, this 7.31% day in, day out, week in, month in, month out, year in, that you own this account, you are owning so much more protection, okay? So much more protection, so much more diversification than you are with your exposure to VOO, all right? So think about what type of investor that you are, all right? If you have a long-term horizon and you're 20 years old, VOO, right? Very simple. Not rocket science, very easy. Investing made easy, baby. That's what that's what we're looking to drive home for investors who do not think that it is possible to seek good, solid, low-cost, diversified exposure to the stock market and doing so on their own, all right? VOO is your wheelhouse. Now, as you start to get older, okay? As you start to get older, you may want to start to consider diversifying into more of a broad market index. And that's what this is. This is only covering the S&P 500, and we'll get into that in a second, okay? The diversification comes through the 3,607 different companies under VTI. That is what you're buying. That is what every single dollar that you have is going into that money machine and is churning for you. It's working for you. It's working. The 1.83% dividend compared to the 1.92, fairly similar to the S&P 500. But 508 companies here in the VOO, right? These are the 508 companies that are currently represented in the S&P 500, okay? So huge difference here. You can see by achieving this right here, you're gaining this. And conversely, by going after this, you're giving up this, okay? So drastically reducing some diversification on this side of the house and gaining diversification over here, broad diversification. I mean, we're looking at 7 times more diversification over here in the VTI. Where does that diversification go? The diversification is made up here. The VTI is a total market index, okay? So you're reaching down into the small cap category where companies that are legitimate companies, 300 million in market cap all the way up to about 2 to 3 billion. It depends on what brokerage you go with, will define their small capitalization a little bit different, okay? But starting all the way down to your small caps, right? Where you've got a lot more churn, a lot more companies maybe going out of business, but a lot more companies with accelerated revenue, right? That's VTI is getting you exposure to this small capitalization. And then we step up and we'll also have some of those medium cap companies, right? Some mid cap companies here, getting you some exposure here. And then similar to the VOO, because the VTI is invested in the exact same companies as VOO on the large cap side of the house, right? But this is all you have over here is the largest companies in the S&P 500 when you're invested in the VOO. So fairly aggressive, right? This is the US stock market. This is indication of the largest companies by market cap in the US stock market, okay? But it is fairly aggressive in nature, okay? That's the huge difference between these two products. Now, can you own both of them in the account? It really just depends. I've got people that come on the channel and I want you to keep asking those questions. We're going to keep on mulling over these questions until each and every one of you guys understand what the absolute crystal clear answer is to what product you should be investing in. But as a rule of thumb, I typically like to see you guys in one or the other exclusively, all right? Now, if you're mid-range like me, I am invested in both. I've got the S&P 500 over here because I'm looking to grow capital quickly, and I do have a long-term horizon, so I'm looking to grow capital correctly, and then invested in the VTI here in my spouse's account because she has a less risk tolerance to the market, right? So I've got the S&P 500 equivalent to VOO over here because I have a higher risk tolerance, and VTI over here for my wife who has lesser of a risk tolerance. Just to give you some examples on how in real life I'm utilizing these two products, which are drastically different, guys. But again, these are the premier players in the industry. It does not get any better. Look no further than these products here, or the listing of ETFs on the Vanguard's listing of ETFs. Guys, thank you so much for tuning in to this comparison. We were overdue between VTI and VOO. We are talking about the creme de la creme, the cream of the crop here in the investing world. Financial managers are not going to recommend these products because of this right here, okay? This right here. If you think for a second that you cannot get solid information for YouTube, think again, recheck your compass, make sure that you're on the independent investor channel, and we're delivering more quality than 1,000 suits could ever deliver in a financial planning office. I guarantee it. I guarantee it, and we're doing it free of charge. Guys, hit the subscribe button for me. You'll be notified of future videos that we put online. Make sure you leave your comments in the comments section of this video. And as always, share the video with new investors who have to have this information. It's not optional. It is absolutely essential. Guys, thank you so much for tuning into this video, and good luck in your investment future.